Hi, it's Sam Lee. I'm the president and CEO of NorthIsle Copper and Gold. We've got a really exciting copper and gold porphyry in British Columbia. It's got a PEA of about $1.1 billion after tax, 19% IRR after tax, almost about 600 million tons of indicated, another 350 million tons of inferred.
Not bad for a $40 million market cap company.
I don't know.
No, no. Let's talk about it. Okay, difficult market for junior exposure, and certainly on the equities front for sure. How much money have you raised to date?
Over $20 million since I've joined, which was October 2020.
Right. So I want to talk to you about capital allocation. Okay.
Yep.
Do you think you've been good arbiters? Do you think you've been good allocators of that capital for a $40 million company?
Yeah, that's a really, really good question. So in the end, I think whenever you think about allocating capital that you raise, you obviously have to be cognizant as a shareholder as to what the results, what the return is going to be. Luckily, I've got 4 shareholders that currently hold about 40% of the stock. I myself own about another 5% on a partially diluted basis. So we are exceedingly focused on what the capital allocation decision should be. So obviously back in 2020, when I had recognized this opportunity, earlier than that, obviously during the pre-COVID era, I did understand that the electrification motif and decarbonization was going to be critical. This was an environment that was rising, but for COVID obviously hitting earlier that year. Capital was quite available. Everything was obviously stronger from a sentiment perspective. And we were on track to develop our project, obviously, to the PEA, which we completed, and then through PFS and feasibility study in very quick order. Obviously the confluence of events that happened post-COVID, I didn't anticipate COVID being as elongated as it was. Obviously the things that came out of it, supply disruption, China shutting down, and then of course the war in Ukraine really compounded this negative risk-off sentiment, which impacted the entire industry. So whilst we actually raised the money to progress this forward through to pre-feasibility study with baseline studies, et cetera, we did it incrementally at, obviously much higher prices, which obviously reduced dilution. But we focused on the exploration perspectives around growing the project to call it 1 billion tons, which seems to be the critical number for the majors, and of course increasing the grades and the NSR value of our rock. Our project is blessed with infrastructure thanks to the BHP Island Copper Mine, which was in production for 24 years. We've got paved roads, we've got power lines up top, which obviously is run by the BC Hydro. So renewable energies, all of the virtues that you would want to see in a project getting developed. So our focus really was more on enhancing the project, becoming higher grade, higher NSR values, and larger. And that's why we focused on 3 key areas, including Northwest Expo, which is the area that we drilled out in 2021, where we've now defined an area. This is keeping in mind only 3 kilometers from our project, so certainly something that can be vended into the project. NSR value is about 3 to 4 times higher than what we currently have in our resources, and certainly grades 4 to 5 times higher in a gold-rich zone within the copper porphyry. So, what are the implications of this? Well, obviously, you can think of this as expanding the project, but you could also think of this as potentially creating that starter pit that a lot of companies seem to successfully progress in times of market volatility, right? So lower capital intensity, higher IRR projects. So there's a lot of really good levers that we could pull, which is why we focused our intent on drilling that area. We obviously drilled Hushamu. We've expanded some of the footprint down pit and also beyond the outlines of the pit. And we're going after, again, Pemberton Hills, which is really the big lithocap defined system that we had our joint venture with Freeport a few years ago. So I think for us, the exploration focus really does give that incremental value around every dollar that we spend, and it's something that we can actually display and show in reasonably short periods of time. Whereas the project in the company is underpinned by this, 600 million ton, $1.1 billion NPV value, 8% project that's already there. So whether you want to think of that as an option value or whether you want to think of that, this was done at $3.25 copper, 1650 gold, right? Every 25-cent movement in copper prices increases the NPV by about $300 million. So this can be a very significant mine beyond its level of significance today. That is what underpins the project with the exploration activities that we're pursuing. So we think that that's the right combination and allocation for this market.
Okay, look, there was a lot of companies that came out of 2020, formed after 2020, because there's a kind of naive innocence about, look, it's easy. Everyone's doing really, really well. Let's go start our own company up. And I want to make sure you're not one of those, right? Yes, there's a confluence of events, COVID and supply chain issues and inflation and so forth, but everyone's in it, right? You had some data that you walked into. You knew what you were getting into. The grades are, let's say, on the low side, right? You got a lot of it, but it's on the low side. And a PEA, which suggests 19% IRR, plus or minus 30% can wipe that out with some, if things don't go your way. So that's why I asked the question about capital allocation, because you got some new capital when you've been in this thing for a while now. You got a sense of what you need to do. So I want a kind of honest conversation about, like, how do you drive that value up? Exploration will do it. And yes, of course, you want to chase higher grade. And yes, you want to be efficient with the capital allocation, with your drilling. Everything needs to be efficient. But what do you see as those kind of long poles in the tent? Because if I'm retail looking in, I want to feel that you guys are in control. You got a plan. You know how you're going to come at this thing, and you know how you're going to shift that share price from the 17 cents it is today to much higher. So what are the things that are important to you?
Yeah, no, that's a very good question. I do want to just make a slight adjustment. Yes, we are a low grade, but pretty much average as it relates to British Columbia. And the reason why British Columbia typically has low grade is this exact access to infrastructure that I've referred to. And what makes us on top of that is that our strip ratio is second to none. It's 0.7 to 1. So that's ore to waste. And I think, waste to ore rather. And I think that is critically important as it relates to our economics. But put that aside, because we all know that's there, as my chairman always says, people pay for mystery, not history. So that's our underpinning value. When I came into this in 2020, I looked at a couple of precedents out there, and obviously looking more around copper porphyries that, again, in my not only investment banking career, but also my engineering studies and thesis, was all focused on copper. And I do understand that copper is a much more medium to longer term proposition. And when it does happen, it happens very quickly. But it is effectively a second half of the cycle proposition from an investment perspective. And the one company that really did resonate with me was Filo. And this was before the real sizzle around that story. At that time, it was called Filo Mining, and they had a reasonably attractive study on their project. It was different circumstances. They're bigger than we are. They're in probably a little bit less of a friendly environment as it relates to infrastructure, but it was a good project at the time, and they had focused almost exclusively on exploration, going after the deeper porphyry. Because they knew that project was always going to be there. And of course, if we all know Lucas, he's a no guts, no glory guy, and he really wanted to emphasize the mission of the company really being more exploration. So much so that Filo actually has changed their name from Filo Mining to just Filo, right? And then of course, that success begets more success. They found the deeper porphyry system, massive intercepts. And of course, tracked to BHP, 9.9%, $100 million, $3 billion market cap, et cetera, et cetera, et cetera. And that is, in my mind, a bit of an aspirational goal and understanding of how this market really does work. What can you do today that can really attract that level of interest, right? Like, because we all know that this project, or at least all me and my big four shareholders and people that are in this story all know that our day will come as it relates to our currently defined project. It is a very, very valuable project for, call it a $4, $5, $6 copper price environment, which I think we're embarking on in a reasonably short period of time. But what can we do today as a management team to allocate capital responsibly, so we're not diluting our current shareholders, but we're getting that incremental value, and it's 100% exploration. So we're blessed with a 50-kilometer Porphyry district across, pretty much starting from that BHP Island copper mine all the way to the northwest, where there's a wind farm that's owned by a major conglomerate. So a very industrial area. We've targeted 3 areas within our project. Northwest Expo, which is the 3-kilometer target that I just described, which we're currently drilling today. We've got Pemberton Hills, which is potentially that much bigger system, a deeper Porphyrian system that exists just between our project and the Island Copper project, so equidistant, 7 kilometers away. This is something that is defined by 6.5 by 1.5 kilometer lithocap, which is something we don't see very often, if at all, in British Columbia, because usually the lithocaps have been eroded. So this is a real big marker around the size of the system that we have. And we believe is tilting at approximately 30 degrees, which is pretty acute, which means that the source of the porphyry underneath the lithocap should be closer to surface, right? So we may have thickness and reasonable access to it, and that's something that we've also budgeted and focused on from an exploration perspective. So we really do have this outside of the main project, this ability to enhance this again from a size and grade perspective.
Right. So let's better stick with the money then, because you're talking about kicking off a new drill program. But you better tell us why you're able to do a new drill program, first of all.
Sure. And that's where the capital that we've raised is going towards, right? We've been very successful in accessing not only flow-through capital, but also critical metals flow-through. So in Canada, there's this new critical metals tax credit that allows companies such as ourselves that are focused on critical metals, copper being one of 5 critical metals that's identified by the Canadian government, to access this product that gives you an incremental 15% tax credit. So we were able to raise $7 million last year at a 60% premium to our back end, which is remarkable because, again, critical metals flow through in Canada is a very great product to raise exploration capital. And so that we're fully financed for these programs that I've just talked about. I was
getting more veering towards permits.
I apologize. Okay, so in terms of the permits, you raised like a very interesting question, right? Because this is not a question around exploration, right? This is a question around how do we reduce this perception that you cannot permit on Vancouver Island, which is where we're located. We're on the northern end of Vancouver Island, right next to a number of mines, and we share our surface rights with Western Forest Products, who's been logging for over 50 years there. And it was really a matter of perception over reality versus reality. And so what we've identified, and what I think the world and certainly Canada's identified, is that a consent-based approach around your landholders and your community and your shareholders, stakeholders, is really the only way to go here. And so what we've been able to do is establish agreements with our First Nation partners, whereby we not only consult with them prior to going after our permits, we actually get their consent prior to going through our permitting process. And so it usually takes about 6 months to 2 years to get permits in BC for a major exploration program, like a 5-year MIAB that we went after. That took us 14 weeks. So those agreements, even though it's nuanced in a way that we are, obviously establishing consent first, then going through the government process, has really delivered these results whereby we get these permits on a very expedited basis. So what does that tell you, right? Well, you absolutely have political will within the country because of the critical metals movement that's happening not only in Canada but the rest of the world. So they're looking to expedite critical metal projects in Canada, but they're not going to do it without the consent of the landholders and other stakeholders, First Nations being probably the most dominant. And so we have established a very strong relationships with them, and we're obviously working arm in arm together to get that consent initially. So fast forward to then this question of, well, these guys should be trading at massive disparities, or currently on analyst consensus basis, currently trading at about 0.06 times of our net asset value, whereas our BC Porphyry peers are currently trading at 0.2 times. So that's your 5x right there, because of this mental gap that people have around where we're located. But providing this evidence, I'm hoping, is real evidence that we've established that framework to not only get these quite significant 5-year exploration permits, but also as it relates to going through the development stage and making sure that we're contracting the permitting timeline for these critical metal projects in Canada, for which we do have, obviously, will on the political side and also on the First Nation side.
Right. Okay. Yes, it addresses that, and because there you go. You've got permits on the projects, the multiple projects and multiple targets. You've now, and I just want to stick with the drilling a bit, so I'm going to bounce around a bit here because there's a whole bunch of assumptions I think out in the marketplace, and certainly inbound to us, which suggest that. Let's talk about the 2023 exploration program. So what are we talking about in terms of dollars or meters, and what exactly do you need it to do? You've got a lot of pounds in copper equivalent terms already. What does this need to do? Higher grade was going to do what for you as a company?
So the initial focus, again, is the Northwest Expo. We're initially doing 3,000 meters, and that should get us to an updated resource of, as I said, based on the historical drilling that we've shown, about 3 to 4 times higher NSR value. So we're talking $75 per ton NSR value versus a $25 per ton NSR value, which is what our current resource has. So that's significant, right? Like if you think about it, this is 3 kilometers away. We could potentially utilize the same infrastructure as in our PEA, but if you're increasing your top line revenue by 3-4 times, that is a very significant amount. So the objective is to grow that component as big as possible. We had set out to define it initially as a 480 meter strike length by 360 down dip, and our drill results are approximately 89 meters to 100 meters, right? So it's pretty wide thickness. That's what we're going after with the initial amount. So depending on what we see on that, on those results, and again, we're drilling already. We commenced 2 weeks ago. Then that's going to inform whether if it goes down dip, if it expands towards a certain direction, then we're really going to try to expand that overall tonnage, overall envelope, with the remaining drilling, which is approximately 3,000 meters. If it's also, there's a logistical time as well in getting the assays, right? So we may actually head over to Pemberton Hills, which again is that massive lithic gap. This is, in my mind, the real sort of swing for the fences proposition, which effectively caused, the same proposition, similar proposition that caused Filo to really expand, right? Because this is the deeper buried porphyry, massive system, 6.5 by 1.5 kilometer lithic. It assumes this is the type of system you'd find in Chile and Peru. But again, it's very early stage. We've spent approximately $5 million with Freeport, our joint venture partners, and ourselves already. So we have a pretty good grasp of the fact that it's tilting about 30 degrees to the southeast, which means that the source of the porphyry, subject to faulting, would be pretty close to the surface structurally, right? So this is a reasonably thought out targeting process. We've identified 14 targets. We've done IP mag that has resonated positively around these 14 targets. And we, depending on what we see at Northwest Expo, how we shift that capital around, we may use a portion of that funding to go after Pemberton Hills. And so those are our main priorities. And then we've got a third a priority, which is Goodspeed, just to the east. That the thesis there is that it may be connected to Northwest Expo, Red Dog, and Goodspeed, all within a very short distance. So those are the three opportunities. The first and third one are kind of nearer surfaced, higher probability, but the system probably is, a little bit smaller than it would be an add-on to what we currently have. Whereas the Pemberton Hill proposition is higher risk, but the system is absolutely enormous, and it's again akin to something what you'd expect to see in Chile and Peru.
Right, and let's be clear with people exactly what they've been investing into here, because yes, you've got a PEA from 2021, but this isn't the beginning of a development story. This is still an exploration play, I think, in terms of value creation. But you tell me, because you've talked about, we've got a starter pit. There's a starter pit, but the numbers of the PEA suggest $1.4 billion with a 2-year construction period. So you're not going to do that, or you're going to have to do something quite spectacular if you are. So going off and drilling, hopefully, hitting on some of these targets, and not just mineralization, but economic mineralization to, increase the type of return they could see from however someone comes at this pit. That's really, really important to you in terms of painting a picture for a strategic, but you've also got to construct something for the market now to say that, look, I think we can paint that picture for strategic. And we do have a process that we can start and move through the phases on. So again, allocation of capital, really, really important to you. So how do you start painting those pictures?
Really, really good question. Okay, so it all depends on the environment for which you're in. So if we were a $200, $300 million market cap company today, we would go gangbusters on developing this project. It is something that is worthy of going very rapidly into the pre-feasibility, feasibility, and starting baseline studies today, which expedites or contracts the timeline for permitting, right? It is worthy of that, but at a $40 million market cap, the dilution would be absolutely enormous to go through those things that typically take 3 to 4 years, right? So to your point about how do you then focus and make sure that you're making the right capital allocation decisions today, well, it's clearly exploration, which I've touched on. But I want you to understand that and your listeners to understand that when I say in the past the starter pit, our mission is to find the answer, starter pit to what? And we have this entire 50-kilometer district that has all these incredible targets, and that can be the answer to that question. It's a starter pit. That reference is only related to the majors, the incumbents, the BHP. 75,000 tons per day is a reasonably small project. It's about half of what they would, consider, or perhaps two-thirds of what they would consider as being a material project. But what we've seen certainly in the last year and a half to 2 years, is there is emergence of a much broader group of entities that are not only looking for copper exposure, they're looking for gold exposure. And to be able to combine those two commodities together is remarkably advantageous. So 35% of our revenue base, based on our PEA, comes from gold, right? So that's 100,000 ounces of gold a year. This is recovered gold a year for 22 years. And that's our byproduct. In all respects, that is actually a pretty significant production profile for just the gold. And then if you were to add on, whatever we get at Northwest Expo, which is what we're drilling right now, which is the higher grade gold zone in the Porphyry, that just makes it more attractive. And by the way, you have 100 million pounds of recoverable copper production for those 22 years. So the world doesn't just revolve around the bigger companies. Yes, $1 billion CapEx is quite significant for a junior company to do themselves. I don't think I ever suggested that we would go down the path of doing that ourselves. Partnerships have always been a critical focus for us. We've run a number of informal discussions, processes, whatever you want to call it, to understand what we can get from a royalty perspective, right? Think about it, 100,000 ounces a year for 22 years, $400 ongoing payment. That's over $1 billion upfront payment just on the royalty at a 5% discount rate. So, but the question is, when do you do that royalty? Is it today when you're at a PEA, or is it right before you need to finance a project? You'll get the $1 billion when you're closer to production. You won't get it today. So again, it's a capital allocation question. The concentrate, I would suggest, and I have suggested publicly, that we're kind of in a wartime scenario right now, where you do see an allyship of countries that want to belong together during these volatile times in the world. And right now, the allyship is very significant, at least in my mind. It's the Canada, US, Japan, Korea, right? These are agreements, formal agreements that are being signed within these allied countries around critical metal supply, right? And what does that mean for our project? Well, our project is 25 kilometers away from the closest deep sea water port from continental America to Japan. It's got exceptionally clean concentrate, very low arsenic, very low deleterious elements, certainly below the thresholds of a Japanese smelter. And so strategically, this is a very important project, which, as we all know, countries and their lending banks will support at the right time. So the $1 billion question that you bring up isn't really that much of a concern to me. That was a big part of my business at the right time. We're clearly not at that right time today, but this is the project. Our job as thought leaders is to have the understanding of what projects resonate at periods of the cycle that aren't today, right? Because if it was today, then everyone would understand it. And I can tell you the merits of our projects, the virtues of our projects are very, very appealing as the world turns today, and also where the world is progressing in the future.
Right. And that's very, very appealing if you start delivering on the exploration. This is why I just want to be clear about what is the company I'm investing into. It feels like it's an exploration company, which has got a lot more to give. Companies have the profile of raise money, drill, raise money, drill. Nothing wrong with that.
Yes.
That's the name of the game, right? Development companies, you got a PEA. Do you, knowing what you now know, say, look, it is pointless us moving through the economic study phases because a big guy who's got big balance sheet, who's got capital, he can allocate the capital needed to get this thing going, is going to view the data themselves. They're going to have a different view. We've seen a few business models over the past couple of years, partly driven by taking advantage of the market, and partly as a reaction to the market and or lack of reaction from the market into their current strategy. So, do you feel yourself like evolving? Slightly changing strategy? You're not losing anything in terms of the asset or what the asset's giving up. In terms of the way you present it to market, that's the important thing here. So how's that changed, if at all?
Yeah, so since the last time we talked, it has actually changed. If you remember the last time we talked, probably a year and a half, 2 years ago, we were on the path of raising $20 to $30 million to go through that de-risking process, environmental baseline, et cetera, et cetera. Clearly, we got to a point where we said that would be way too much dilution for the size of the company that we have today. And we're blessed with this exploration package around Northwest Expo, Pemberton Hills, Goodspeed. But on the development side of it, we recognize, and rightfully so, that the key right now, the critical path item right now, are First Nations relationships and agreements, and the ability of us working together. So from a development perspective, that's where we spent our time and capital. Like, these agreements are providing capacity funding for our First Nation partners to viably assess what we are doing on their land, which is absolutely critical. That, in our mind, is the most important part of development, in addition to initiating our baseline studies, which we did last year. And then the study work is going to be, reasonably straightforward. This is a porphyry. This is not, a typical epithermal gold project where you kind of lose the vein and you're dead. This is a nice, big, large, chunky, predictable porphyry. Last year was a concerted effort. There was a concerted effort to, pivot's probably too much of a strong word, but to understand where that incremental value appreciation is going to come. Like, we could sit on our hands and just kind of wait for the time that we all believe is coming. But that's not what I'm here for. That's, quite frankly, this is something that, is activating me and energizing me to build something out of this opportunity. And what right now the market is wanting right now is exploration. They want to see exploration. They want to see the sizzle. They want to see the mystery. And the beautiful thing about this story is we can have both, right? We can actually intersect both of those circles, which is what we're doing, and that's what the market is financing us for.
Okay, you got four strategic investors. We've interviewed one of them, Michael. In there, they're obviously in this for a period of time. Again, coming back to how do I view the company? And you said copper's a longer term play than gold. It just is at the moment. Look at the thematic. We can talk about the thematic, maybe not today, maybe another time, but it feels like this thing's going to take a longer to evolve and get to that end point. But that end point doesn't necessarily involve you or your current shareholders. So how far do you take this along the exploration curve? And how do you decide what's the point to jump out at?
So maybe I'll touch on the macro first and kind of give reasons as to why people are viewing this as a longer term opportunity and perhaps why they're not coming in today. So $1.2 trillion, according to Wood Mackenzie, needs to be spent on critical metals by 2050, right? Of that 1.2 trillion, 750 billion needs to be copper. So by a vast margin, copper is the most critical metal of everything, okay? There does not exist today that many projects in the world to satisfy that capital spend, okay? So that we are headed towards an iceberg here, but that stat is based on 2050. If you want to even think of it 7 years away, 2030, it's reduced to about $250 billion, right? So it's reduced, but it's still extremely ominous. And that's in the next 7 years. And we all know projects like ours take 15 years to develop. We're in year 9 of 15, right? So the macroeconomics suggests that as an investor, you know what? I think I don't need to invest today, especially when people are hiding under a rock and I could look more foolish than not. Someone described to me the other day, it was a really good one, is that the fear of underperforming, so fear of OUP, is actually greater than the fear of missing out, right? And so that's the condition we're in today as investors. And when people talk about the context of what copper's doing, it just falls on deaf ears for that reason. Fear of underperformance is greater than fear of missing out. We all know that shift will change. The question is what time, and you've heard my soliloquies on when you think that is, so I won't go into that again. But the wonderful thing of having these cornerstone investors, which was your question, Dale Corman, our chairman, Mining Hall of Fame, octogenarian, been through many of these cycles. He owns 11.1%, founder of obviously Western Silver, Penasquito, obviously sold to Goldcorp for $1.2 billion, obviously Western Copper and NorthIsle. Michael Gentili, Michael very well. We've been on your podcast many times. He's a contemporary with the patience and the virtues, very, very much akin to Dale, right, of an octogenarian. We've recently announced Donald K. Johnson coming in at 9.9%. So for those of you that don't know, Donald is a legend on Bay Street in Toronto. A lot to do with his political involvements, getting the charitable donations effectively being tax credits back in the 90s. Very heavy influence on the political side. Very strong relationships with Warren Buffett. Created a $1 billion company over the last 20 years and is now a 9.9 major shareholder of ours. He's vice chairman at BMO as well. And then another gentleman who just came in for 9.9%, who I can't release his name, but I can tell you that he's part of this group that we all are very in tune with and understand what the objectives are. So we're all very long-term shareholders. So these positions have been accumulated over the last few months in and around where we're trading at today. And I could say all of them except for maybe Dale are at lower than their cost base, right? They came in lower than their cost base prior to coming in. So this is a very unique opportunity for them. And the understanding is that whilst, you keep on referring to us as an exploration company, I agree, but we're not binary, right? We've got this underpinning value that is defined by our project PEA that almost immunizes us from the downside of exploration, right? That's our fundamental base. And I would argue that we're not even trading at that fundamental basis today. So their exploration is truly something that's incremental, and it's incremental off of already a massively discounted valuation, which is why it's appealed to all of us who've come in over the last couple of months.
Okay, I hear you. You're non-binary. You've got to be careful with that. What I'm asking is, for me, retail guy, I get these very wealthy guys who made a lot of money in this space. They are looking at this as long-term play, and maybe it's not a big part of their portfolio. But as a retail guy, I'm saying, look, how do I, again, I keep coming back to it. What am I buying into? How do I play this? Because if I understand what your game is, then I can say, well, maybe I can come along on that journey too. Because I'm clearly not going to be the first in. Those guys have bought in a long time ago, as did you. And once you've made a decision as to how you exit, you'll exit. I can't copy your business model, your way of making money, but how could I play this?
Interesting. So you bring up two things. One, as I said, the only person whose cost base is probably lower than where the price is today is Dale. Everyone else is pretty much at a higher cost base, right? So including myself. So I've purchased over 3 million shares since I've joined. As you remember, I didn't take a salary the first year. I took it all on options. So this is actually the entry point that we pretty much all of us, 3 or 4 of us are in right now.
So that's good.
So your second point is actually more, it's a very, very interesting question. How does a retail individual say, look, I mean, I get it. I can't put this into my child's education fund. I need to actually see a little bit more, near term proposition. Well, think of this as the exploration that, all of these thousands of exploration companies purport that they have. So we have the same, if not better, opportunities, certainly better thought out and better financed opportunities with this underpinning project that immunizes you from that downside. So if we don't hit on any of these things I talked about today, right, we still have $1 billion project, NPV project, that stabilizes, that's currently trading at 4% of its intrinsic value, right? That's the proposition for the general investor. How do I increase or not increase? I won't say, I can't say, in good faith that this is a better exploration opportunity than any other thing out there. But I can say that on the downside, there is a massive base that is preventing this from being effectively, an orphan stock. And that base is going to ebb and flow with the condition of the market. And based on the people, the 4 plus myself that have 5% of the company, based on our 200 years of experience, we know that is coming. That point in time where that activation of the value of the project that we currently have defined today is coming, right? So those are the 2 catalysts that everyone always asks for. What are the catalysts? What are the short-term catalysts? Well, I can't control either, but I can control where the capital goes. And we've already defined a great project today in NorthIsle. It's the North Island project, and we've now allocated $8 million to our program for 2023, which we currently have.
Stanley, thank you very much for running through that. It's good to see you. We need to see you more often. Like what you're doing there. Wish you well.
Appreciate that, Matt. Always a pleasure.